Retirement just got a whole lot tougher. And no, it's not because Americans estimate that they're going to need $1.46 million for a comfortable retirement. It's because of how fast retirement is getting out of reach. Take a look. This is a chart showing how much money Americans think that they need in order to live a comfortable retirement. And back in 2020, Americans said they needed less than $1 million in order to retire comfortably. Today in 2024, it's almost $1.5 million to retire comfortably. To put that in perspective, the magic number for retirement grew by 15% between the years 2023 and 2024 alone. But over just the last 4 years, between 2020 and 2024, the magic number for retirement grew by 53%, which means the amount of money that you need to retire is growing faster than your income is growing. And it's also growing faster than your ability to save for retirement. Between 2023 and 2024, incomes are expected to grow by around 3.2%. I got this number from the Social Security Administration because they increased the cost of living adjustment. They increased their Social Security benefits by 3.2% between 2023 and 2024. But between 2020 and 2024, incomes grew by under 21%, again, according to the Social Security Administration, while the amount of money that you need to retire or that people want to retire grew more than double people's incomes. So you can start to see the dilemma here, which might be why we're facing the largest retirement crisis America has ever seen. And this is where you have a lot of opinions on how do you fix this retirement crisis. For example, Larry Fink, the CEO of BlackRock, has come out and said, well, the solution to this is that Americans have to work longer to retire. That way you can start pulling out Social Security after you've contributed more money for more years into Social Security. But let me break down the different parts of retirement now, and then I'm going to go into what this means for you and how you can actually retire and build financial freedom or financial wealth despite these changes that we're seeing happen, because yes, things are more expensive today. Yes, the average person has less ability to build wealth today because more people are spending more of their income to pay for their rent, to pay for their groceries, to pay for their travel, to pay for their car. But that does not mean it is impossible, but that means you have to be more financially educated today than before, and that's why you want to get started. So let me wipe this off and let's go deeper into this. And also, if you want to stay up to date on what's happening in the top finance and business news, you should also know that Market Briefs is a free resource that I created. It's a free newsletter where my team is working to break down what's happening in things like the economy, the housing market, the stock market, crypto, and the global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and it's completely free, and I promise you're going to love it. And you might be saying, but Jaspreet, how can you promise that? Well, if you don't, you can unsubscribe at any time because it's completely free. So if you want to join Market Briefs, I got the link for you down in the description below. We're going to go to briefs.co/market. That's briefs.co/market. It always feels a little weird when you hear millennials or younger people talking about Social Security in the sense that we're going to receive the Social Security check to fund our retirement in the future. The problem with that is Social Security is running out of money. If you take a look at the Social Security asset chart, you'll see that the assets in Social Security are falling. What that means is Social Security is paying out more money than they're bringing in. And if this continues, the Social Security Trust Fund is expected to decline by the year 2034. Now, this is where a lot of people say, oh, but Jaspreet, that's not going to happen because the government can change the Social Security system. They can raise your taxes, they can start printing money, but none of these solutions actually solve the Social Security problem. And if you really think the Social Security is going to be able to fund a dream retirement for you, you probably should just leave this video right now and go live in whatever la-la land that you're living in, because Social Security will never, ever, ever, did I say ever? It will never, ever, ever allow you to live a life of financial freedom or the life that you want. So please don't rely on Social Security. If you get whatever Social Security check you get when you're older, great. Use that as icing on the cake, but do not rely on Social Security because that is not going to allow you to live any sort of financial freedom. You want to be able to invest your money yourself. That way you can create your own financial freedom and your own financial options instead of hoping that the government is going to be able to fund your retirement, because now people that are entering retirement are realizing that Social Security is nowhere near enough. The second way that people would traditionally fund their retirement is through their savings. And when I say savings, I'm not talking about their investments, I mean savings, because many people, especially previous generations, would save their way to retirement. That you save a little bit of your paycheck and then you put your money into a savings account, you put it into a CD, you generate a little bit of interest, and then you'd be able to retire and use this savings as a way to help fund your retirement. The problem with that today is that inflation is still running hot, which means that inflation is eating away at the value of your savings. Now you might say, but Jaspreet, what if I have a high interest savings account and my high interest savings account is paying 4 or 5% a year in interest versus reported inflation is 3% a year in interest? Well, what you want to remember is that this reported inflation that you're seeing isn't always the real inflation that most people are feeling. For example, if you look at the reported numbers, grocery inflation from 2020 to today is around 22%, which means a $100 cart of groceries in 2020 should cost you $122 today. Now, if you've ever gone grocery shopping yourself, most likely, I can't guarantee this for you, but for me, this is the way. If you bought that same $100 cart of groceries today, it's going to cost you way more than $122 today. So if you are just saving your money, especially if your money is not in a high interest savings account, it is going to be very hard for you to beat inflation. And all you're trying to do when you save this money is just try to beat inflation or not have your money really get eaten away as much by inflation. When you have the high interest savings account, your money really is not growing. It's just trying to not be eaten that aggressively by inflation. That's the goal with a high interest savings account. Now, this doesn't mean you shouldn't save any money. You want to save some money to protect you against an emergency. You want to save money to be able to buy investments. You want to save money to be able to make a purchase. But you cannot save your way to retirement the way that you could before, because you want to see more growth in your money. That way you can actually beat inflation and generate a return on your money, a real return on your money after inflation. That way your money can actually grow and make you wealthy, and your savings are not able to do that in today's economy. And the third traditional retirement tool was, of course, your pension. That if you work in a company, your company is going to give you this nice pension. But what we're saying today is that more and more of these pension funds are going bust. And even if you think you're getting a pension, well, there's a chance that if the pension fund has not been funded properly, or if those assets are not invested properly, that you might not get the full funds that you were expecting to get from your pension. And if you're under the age of 45, well, chances are you're not working for a company that's going to give you a pension. So that means Social Security is not going to be able to fund your retirement the way that it would have before. Your savings can't fund your retirement the way that people expected it to before, and pensions are a thing of the past. What does that leave us? Because these are the three traditional retirement tools that are essentially all obsolete. So how do you actually retire today? There are three main strategies that I want to discuss, and number one is that you work longer. Now, this is the option that you're going to say, I don't want to do this, and I understand. But I'm also going to give you some harsh reality right now, which is that many Americans, if not most Americans, are going to have to realize that they will have to work longer in order to retire. This is why Larry Fink, the CEO of BlackRock, came out and said that most Americans probably should work longer in order to be able to get Social Security, which is why he was talking about raising the Social Security retirement age. Now, the reason why is because most Americans are not going to be able to have enough money to retire. Now, we can point fingers, blame Wall Street, blame BlackRock, blame the government, blame Social Security Fund, but at the end of the day, blaming doesn't fix the problem. I want you to have the money so you don't have to play the blame game because you have a self-funded retirement. But the reality is many Americans, if not most Americans, especially those of you who are under the age of 45, if you continue working and if things continue the same way that they are now, most Americans are going to be nowhere near having enough money in their savings and investments to retire by the time they turn 65. And those monies put aside, coupled with Social Security, will not be enough, which is why most Americans, I believe, will end up working way past 65, especially those of us who are under the age of 45 today, which leaves then option number two, move to another country. There are other countries around the world that are cheaper to live in. For example, you're seeing more and more Americans move to countries like Mexico, even Guatemala, and other countries overseas where you have a lower cost of living. Now, of course, these countries are not the United States of America. You don't have the same protections as the United States of America. You don't have the same benefits as the United States of America. But for people that are really trying to figure out how I can extend the dollar that I have, this is an option for some people. That you can move to a different country, you can take a few $100,000 and you can live like a king, where that same amount of money in America will only take you so far. So this is an option for some people, but again, not my preferred option. I don't want to have to leave and go to a cheaper place to live in order to be able to fund my retirement, which brings me then to number three. Invest your money more aggressively and start investing your money sooner, because if you take a look at the last 5 years of the S&P 500, what you'll see is that the S&P 500 has grown by around 70% over the last 5 years. So during that same period, when you have wages growing by maybe 20 to 25%. The cost of living has grown by 25 to 30% on the reported numbers. You have the investments, stock market investments, real estate investments that have blown past those numbers. So if you really want to become wealthy in this economic system, you can't just do that by relying on your job to take care of you, because eventually you're going to want to stop working. And when you stop working, you're not going to have an income, but you're still going to have expenses. So the job by itself can't do it. Now you might be saying, well, I can save a little bit of my money. That way I don't have to keep working because I can rely on my savings. That's not going to be enough because your savings are not growing fast enough. And what we've seen is that as retirement is getting more and more expensive, you can't save your money fast enough to get to the retirement number, which leaves option number 3, which is you got to be more aggressive with your investments. And many people are going to have to be more aggressive with their investments. That might mean you have to spend less and work to earn more so you can invest more money today. And you might be saying, but Jaspreet, I don't want to have to make that sacrifice today. Well, either you're going to make the sacrifice today, or you're going to have to make a bigger sacrifice in your 60s and 70s because you're not going to be able to live the life that you want when you're older. And that's where you have to make the decision, or would you rather put in the hard work today or when you're older? And not just that, I also want you to understand the flip side to this equation as well, which is that investments don't always go up. The stock market goes up and it goes down. The housing market goes up and it goes down. We have been seeing a boom in the stock market over the last 5 years especially. Does that mean the next 5 years are going to be the same way? No, and there's a chance that it won't be. But the way that you build wealth is by investing your money consistently when markets are up and down. When markets are down, in fact, that creates even better buying opportunities because you can buy investments for pennies on the dollar in some instances. But I want you to understand that the way you become wealthy is by investing your money when markets up and when markets are down. You got to stay consistent, continue to invest your money, and don't be one of the people that when you see the markets go down, you panic and you pull out. Use it as an opportunity to pour more money in because it gives you the opportunity to buy more investments at a discounted price, because that's how wealth is built, especially in this country. If you want to become wealthy, you can't get there just by saving your money. You can't do it just by getting bigger raises. You have to take this money that you're earning and you have to invest this money. And the more you invest your money, the more aggressive you are with investing your money, the better chance that you're going to have and the more ability that you're going to have to live your life financially free. But that requires you to make those sacrifices either today or you're going to have to make them when you're older. Now, of course, if you want to stay up to date on what's going on, you can join Market Briefs. I got the link for you down in the description. You have to believe that you can become wealthy. And if this is something that you struggle with, if you are constantly thinking, man, it's so easy for them, man, this person had it so easy, man, I wish I had that, what you need to do is go out and read some personal development books. Go listen to Tony Robbins. Go listen to personal development podcasts. Go invest in your own self-education, your personal development before you do anything else.